If I had to start investing today, from zero, with everything I know now, I wouldn't chase trends. I wouldn't try to outsmart the market. And I definitely wouldn't overcomplicate things. I'd buy just 3 ETFs. And these 3 would give me everything I need to build long-term wealth. This video is a continuation of what we talked about before. How most people overcomplicate investing, and how simplicity actually wins over time. If you haven't seen that video yet, this will make even more sense once you do. Because the goal here isn't excitement. It's clarity, consistency, and compounding. Let's break it down. Section 1. Why most beginners get investing wrong. Most beginners don't fail because they pick the wrong investment. They fail because they jump between strategies, chase hype, panic when markets drop, and constantly second-guess themselves. They think they need more choices to succeed, when in reality, more choices usually mean more mistakes. That's why in the previous video we talked about minimalism in investing. Owning fewer, broader investments makes it easier to stay invested, and staying invested is what actually builds wealth. So if I had to start over today, I'd build a portfolio that does 3 things. Covers the entire market. Grows with the global economy. Lets me sleep at night. That's where these 3 ETFs come in. Section 2. ETF number 1. The Total Market ETF. Your foundation. The first ETF I'd buy is a Total Market ETF. This is your foundation. A Total Market ETF gives you exposure to thousands of companies. Large, mid, and small, all in one investment. Instead of trying to guess which company will win, you own the entire system. When the economy grows, you grow with it. This ETF does the heavy lifting. Automatic diversification. No stock picking. No constant decisions. It's boring, and that's exactly why it works. For beginners, this removes the fear of choosing wrong. Because historically, betting on the entire market has beaten most individual strategies over time. This alone could be enough for many investors. But we're building clarity, not extremes. Section 3. ETF number 2. The S&P 500 ETF. Growth Engine. Next, I'd add an S&P 500 ETF. This focuses on the 500 largest, most profitable companies in the U.S. Companies that dominate innovation, technology, healthcare, and global commerce. Think of this as your growth engine. Yes, there's overlap with the Total Market ETF, and that's okay. Overlap isn't a problem when it's intentional. The S&P 500 has historically driven a huge portion of market returns. By slightly overweighting it, you're leaning into strong businesses, global revenue streams, long-term economic leadership. This aligns perfectly with the minimalist strategy we talked about before. Fewer investments, stronger conviction. You're not chasing returns. You're positioning yourself where growth has historically happened. Section 4. ETF number 3. International or Dividend ETF. Balance. The third ETF is where you add balance. You have 2 strong options here, depending on your mindset. Option 1. An international ETF. This gives you exposure outside the US, Europe, Asia, emerging markets. Why does this matter? Because the future won't belong to just one country. Global diversification reduces risk and smooths long-term volatility. Option 2. A dividend ETF. This focuses on companies that pay consistent cash flow. Dividends don't make you rich overnight, but they create stability. They generate income, reduce emotional stress during market downturns, and reward patience. Both options serve the same purpose. They balance your portfolio and help you stay invested during uncomfortable periods. And that's the real goal. Section 5. How this ties back to the only ETFs you need strategy. This 3 ETF setup isn't about optimization. It's about execution. In the previous long video, we talked about how simplicity beats complexity. This is that idea in action. With these 3 ETFs, you're diversified, you're globally exposed, you're positioned for growth, and you're protected from decision fatigue. No constant rebalancing, no market timing, No emotional trades. Just consistent investing. Section 6. The real secret. Most people miss this. Here's the truth most videos won't tell you. These ETFs won't make you wealthy by themselves. Your behavior will. What matters more than which ETF you choose is investing every month, staying invested during downturns, ignoring noise, letting time do the work. A simple strategy you stick with will outperform a perfect strategy you abandon. That's why clarity is more powerful than complexity. If I had to start investing today, I wouldn't search for the best ETF. I'd choose 3 good ones and commit. Total market for stability, S&P 500 for growth, international or dividends for balance. Simple, calm, repeatable. Because the real flex in investing isn't finding the next big thing. It's building wealth quietly and letting time do the heavy lifting.